Hey everyone, welcome back to Corporate Decoder, the place where we decode the hidden stories in corporate filings. Today we are diving deep into VenHub Global Incorporated's post-effective amendment number 1 to its Form S-1 filing, and let me tell you, this filing is packed with details about their journey to go public and some really interesting numbers to unpack. Stick around to see what we uncover. Alright, so VenHub Global Incorporated is looking to list on the Nasdaq capital market through a direct listing. They are registering the resale of up to 1554769 shares of common stock by about 2958 of their stockholders. This is not a typical initial public offering where the company sells new shares to raise money. Instead, existing shareholders are looking to sell their shares. This means VenHub itself won't receive any proceeds from these sales. Now let's get straight to the heart of it, the financial tables. These are crucial to understanding where VenHub stands today. Looking at the income statement data for the 9 months ended the 30th of September 2025, VenHub reported revenue of $808,972. That sounds promising, but then we see cost of goods sold at $550,156, leaving a gross profit of $258,816. However, when we look at operating expenses, a staggering $307,237,78, we see a massive loss from operations of $304,64962. Add to that settlement expenses and interest expenses, their net loss for this period alone balloons to $49,227,634. That is a huge number, folks. The loss per S-hair is $1.58. This clearly shows VenHub is in a very early development stage with significant losses. The company was incorporated in 2023 as Autonomous Solutions Incorporated and later changed to VenHub Global Incorporated. Their core idea is VenHub, which is meant to be an autonomous robotics store, combining the intelligence of a store with the efficiency of robotics. They use sensors, artificial intelligence, and robotics to allow 247 access to products, while they are developing AI for personalization. Their current AI systems are focused on operational functions like product verification and navigation. They are also upfront about being a development stage company that began recording revenue in 2025, and their independent accountants have indeed issued a going concern comment. Now, every company going public has risks, but VenHub's risk factors section is extensive, highlighting their early stage nature. They explicitly state they have minimal revenue and a history of losses and expect to continue incurring substantial losses. They face significant competition in the automated smart store industry and acknowledge their limited operating history makes evaluation difficult. A critical point is that their former auditors issued a going concern opinion, meaning there is substantial doubt they can continue as an ongoing business for the next 12 months. This is a major red flag for potential investors. Let's look at their balance sheet. As of the 30th of September 2025, their total assets were $4,612,369. That sounds like a reasonable number, but then we see total liabilities at a whopping $123,200,031. This results in a stockholders deficit of negative $77,0762. This means their liabilities far exceed their assets and shareholders' equity is negative. This is a clear indication of a company heavily reliant on external funding. They plan to list up to 15,547,669 shares of common stock. As of the filing, there are 74,885,456 shares of common stock issued and outstanding. This means the shares being registered represent about 20% of the total issued and outstanding shares. It is important to note that Shana Haneshan and Shashana Ohaneshan, through their entity, So LLC, will beneficially own approximately 94% of the voting power of their outstanding securities. This essentially means they will control the company. Because this is a direct listing and not a traditional IPO with an underwriter, there is no set offering price. The opening trading price will be determined by market demand on the Nasdaq capital market. This can lead to higher volatility compared to an underwritten IPO. They've engaged Revere Securities LLC as their financial advisor for the listing process and will pay them a significant fee worth $1 million in common stock subject to a lockup. VenHub has authorized 100 million shares of common stock. As of the date of the prospectus, there were 74,885,456 shares of common stock issued and outstanding. They also have Series A, B, and C preferred stock. The Series C stock has super voting rights, giving nearly all voting power to the founders Shahan and Shoshana Ohaneshan. This section is key for understanding management's perspective. They detail their business model aiming to revolutionize retail with autonomous robotic stores. They have 4 subsidiaries covering manufacturing services, intellectual property, and company-owned stores. As of June 2025, over 1,400 pre-orders were on hand with initial store openings in California. They reiterate their limited operating history with net losses and revenue. Let's quickly look at their revenue trend. For the 9 months ending the 30th of September 2025, revenue was $808,972. This is their first significant revenue reported. Before that, for the period ending the 30th of September 2024, and for the full year 2024 and 2023, revenue was effectively zero. This shows they are just starting to generate sales. Now let's look at the net loss figures. For the 9 months ending the 30th of September 2025, the net loss was $49,227,634. For the year ended the 31st of December 2024, the net loss was $9,392,702. And for their initial period from inception to the 31st of December 2023, the net loss was $103,766,645. These are massive losses, showing the company is burning through a lot of cash. Here we see the balance sheet as of the 30th of September 2025. Again, total assets are $4,612,369, but total liabilities are $12,320,131, and a stockholders deficit of negative $7,776. This negative equity highlights their precarious financial position. This is a critical part of any financial report. The auditors Bush and Associates CPA LLC issued an unqualified opinion on the interim financial statements, but importantly reiterated the substantial doubt about the company's ability to continue as a going concern. This is because of their operating losses, working capital deficit, and negative cash flows from operations. This formal auditor warning means investors need to be extremely cautious. Just like Warren Buffett would say, if you can't sleep at night because of your investment, you should sell. Looking at the annual statements for the year ended the 31st of December 2024, there was no revenue, but operating expenses were over $9 million, leading to a net loss of almost $9.4 million. For their initial period from inception to the 31st of December 2023, operating expenses were even higher at over $10 million, resulting in a net loss of over $10.3 million. These numbers confirm significant ongoing investment and a lack of profitability. The loss per S-Hair figures are also telling for the 9 months ending the 30th of September 2025, the loss per S-Hair is $1.58 for the year ended the 31st of December 2024. It is $0.36, and for the initial period in 2023, it was $0.61. These are substantial losses per S-Hair, indicating a high cost of doing business relative to their current revenue stage. The exhibit section lists various agreements and legal documents. One key exhibit is the employment agreement for their Chief Executive Officer Shahan Ohaneshan and President Shoshana Ohaneshan. These agreements provide for very high base salaries, guaranteed annual cash bonuses, and significant equity awards. For example, the CEO could get a $1 million base salary plus a $1.85 million bonus and millions in equity, with the founders controlling 94% of the voting power, and receiving such compensation, it raises questions about how this impacts shareholder value. Under expenses of issuance and distribution, we see the SEC registration fee is $49,414. Audit fees are estimated at $50,000 and legal fees at $250,000 for a total estimated expense of $719,414. This is a significant cost just to get this filing done and registered. Here they disclose issuances for services rendered and private placements. Notably, they sold units in June 2025 consisting of 2 shares and 1 warrant for $8.64 per unit. They also conducted a Regulation CF offering selling Series B preferred stock. All these sales happened before this registration statement was effective, meaning they were not subject to public market scrutiny. Finally, we see the signatures of key executives, including Shahan Ohaneshan as Chief Executive Officer and Matthew Hidalgo as Chief Financial Officer. This filing officially marks their move towards becoming a publicly traded company. So what is the story here? VenHub Global Incorporated is a company with a bold vision for autonomous retail, but it is still in its nascent stages. Their technology sounds innovative and they have a substantial number of pre-orders, a good sign of market interest. However, the financial reality is stark. They are burning cash at an alarming rate, face intense competition, and their auditors have flagged serious going concern issues. The founders maintain significant control, and their compensation packages are substantial. For investors, this presents a high-risk, high-reward scenario. The direct listing model itself adds an extra layer of volatility. Will VenHub navigate these challenges and turn those pre-orders into profitable sales, or will they struggle to overcome their significant financial hurdles? Only time and careful market observation will tell. Alright, that is our deep dive into VenHub Global Incorporated's S-1 filing. What do you think about their chances in the market? Let us know in the comments below. If you found this breakdown useful, hit that like button and subscribe for more corporate deconstructions. And a reminder to hop into our Discord server, linked in the description for more exclusive content and discussions. Thanks for watching, and we'll see you in the next episode.